You have 100 shares of Tesla stock in the year 2030. What if I told you, though, that these shares might be your pass to an incredible financial adventure? We're going to reveal the mysteries surrounding Tesla's future today. We'll explore all of the options, examine various situations, and even take into account some innovative technologies that have the potential to completely change the stock market landscape. Tesla has been a force to be reckoned with, from renewable energy to self-driving cars. But what lays ahead? What would cause Tesla's stock to rocket to unthinkable levels? Will it be fully autonomous technology or possibly something even more groundbreaking? It's going to be an exciting journey discovering all that is out there. So buckle up, everybody, because we're going to take a trip through time and numbers. We'll investigate the possible 2030 stock valuations for Tesla, analyze the possibilities, and perhaps even unearth the secrets of Tesla's stock market future. But not before clicking the like button and subscribing to Tesla Stock News. Let's get started now that issue has been addressed. According to this video, the price of a share of Tesla stock is currently at $217. The total cost of an investment in 100 shares would be $21,700. We're talking about a long-term investment. Therefore, the true question we need to answer today is what those 100 shares would be worth in 2030. A forecast chart for Tesla's stock has been created. There are 4 scenarios in this figure. We have produced 2 charts for the Ultra Bear, Bass Bull, and Ultra Bull scenarios, one including FST revenue and licensing, and the other not clearly omitting robot tax implications. Our analysis only looked at Tesla's primary commercial segments, vehicles, electricity, and FSD licensing, leaving out bots and insurance. Worldwide earnings and revenue first. Let's look at the possibilities in the Ultra Bear situation. With an average selling price of $30,000 per vehicle, we project 10 million vehicle deliveries. In the basic case, 15 million deliveries are projected at $26,000 each car. In the bull case, 20 million deliveries are estimated at $23,000 per vehicle. With an average cost of $20,000 per vehicle, we are looking at 25 million deliveries in the Ultra B scenario. It's crucial to remember that Tesla may have to provide more reasonably priced cars in order to boost sales, which would have an effect on earnings. Now, before we delve into Tesla's projected future worth, are you aware of any other shareholders in pro-Tesla optimism? According to our partners at Seeking Alpha, there's more to Tesla's remarkable rise than simply watching from the sidelines for fans of the company and those with an eye for the next great stock purchase. Your one-stop destination for the most recent information on Tesla is Seeking Alpha. Targets for Tesla stock price innovation from Tesla and everything Musk Elon. The internet's top pro-Tesla news outlet is Seeking Alpha. Get to the facts without listening to the lamestream media's anti-Tesla propaganda. For a Black Friday special discount that applies to all scenarios, click the link in the description. By 2030, we project a 20% operating margin for automobiles, including for possible cost savings from economies of scale and better material procurement. These are the corresponding earnings percentages. Now let's talk about the energy sector. By 2030, we expect to consistently generate $90 billion in sales with a 20% operating margin. Contrarily, services are more erratic and are based on variables such as the quantity of Tesla cars that need to be maintained and replaced. In the Ultra Bear scenario, revenue is projected to reach $39 billion. When we combine these segments, the total revenue varies from just under $500 billion in the Ultra Bear case to almost $700 billion in the base case. It's interesting to note that the Ultra case has lower revenue than the Bull case, but this can be explained by the shifting focus of Tesla's business in the future, rising to nearly $100 billion in the Ultra Bull case, all with a 20% operating margin. The question of how much Tesla's stock will be worth in the next years is crucial to the company's future and is a complex one. But fortunately, Seeking Alpha is a fantastic resource and is here to make this Black Friday even better with a special deal. They are an excellent resource for comprehending this and other difficult subjects. For a Black Friday deal, click the link in the description. In fact, the number of Tesla cars on the road, in addition to FSD and other services, will be important sources of income for the company going forward, rather than just car sales. Together with energy, FSD in particular is expected to grow to be a substantial portion of Tesla's primary business. In terms of net income, we project amounts between $96 billion in the Ultra Bear scenario and $139 billion in the Ultra Bull scenario by 2030. it wouldn't be shocking to see Tesla take into consideration share buybacks in the upcoming years, given their strong net income expectations. Let's now talk about stock prices and what your 100 shares will be worth in 2030. We have used a price-to-earnings PE ratio of 30 in each scenario. The anticipated stock price in the ultra-bear scenario is $884 per share, with a market capitalization of slightly less than $3 trillion. A market valuation of about $3.6 trillion and a stock price of more than $1,100 per share are projected in the bear case. The basic scenario predicts a market capitalization of more than $4.1 trillion and a stock price of almost $1,300 per share. A market valuation of more than $4.2 trillion and a stock price of more than $1,300 per share are also projected in the bull case. Last but not least, the ultra bull case predicts a market cap of about $4.2 trillion and a stock price per share slightly around $1,300. Consequently, the value of your 100 shares by 2030 will be determined by which scenario eventually comes true, with all cases potentially seeing significant growth. It is evident that Tesla's growing emphasis on FSD and other services will be a key factor in the company's future success in addition to car sales. With this multifaceted strategy, Tesla is positioned to be a major force in the rapidly changing automotive and technological industries. Tesla's astounding revenue numbers and huge profit possibilities are quite alluring. But what if you could figure out who the next Tesla is? Enter Seeking Alpha, and their unique and effective stock screener could assist you in finding the best stocks with significant long-term development potential. As we examine Tesla's most recent advancements, picture the opportunity to find the next Tesla before its price soars. Keep in mind that Seeking Alpha can be your first port of call for the next great opportunity in investing. Don't pass up this exclusive Black Friday deal. To view the Ultra Bear case, click the link provided in the description. Assuming a $1,200 stock price, your 100 shares would be worth roughly $888,000 in 2030 as opposed to their current value of $20,000. In the worst scenario, this amounts to a gain win of more than $68,000. In 2030, the value of 100 shares would be $10,000 as opposed to the current $220,000, meaning that the base scenario would have seen profits of more than $990,000. In 2030, 100 shares would be worth more than $116,000, resulting in profits of more than $86,000. In the bull scenario, 100 shares would be worth more than $110,000 in 2030, with profits over $90,000. In the extreme scenario, 100 shares would be worth more than $118,000 by 2030, resulting in gains of around $88 million. The price-to-earnings ratio of 30 has been applied to Tesla's energy and car operations for these estimates. Let's now investigate a more plausible scenario. Assuming a 20% operating margin, Tesla could produce 133.5 million cars by 2030, with an average selling price of about $33,000. This would generate vehicle revenue of almost $450 billion. Vitality service revenue is projected to be slightly above $53 billion with an operating margin of 20%. Revenue is still constant. With the same 30 ratio, this adds up to $588 billion in revenue and over $118 billion in net income. A market capitalization of more than $3.5 trillion and a stock price of $1,087 per share would result from this. Comparing the value of your 100 shares today at $220,000 to their 2030 worth of almost $8 million would mean gains of nearly $889,000. This estimate is predicated on the idea that, even in the event that we lower the operating margin to 10%, Tesla's automotive and energy businesses will expand. Even with a more modest estimate and a stock price of $1,776 per share, the market capitalization would surpass $2.1 trillion. In this case, if you acquired your 100 shares at this time, you would still have about $50,000 in unrealized gains. It's crucial to remember that when we take TSLA into account, these projections do not take into consideration Tesla's $570 billion in revenue, with net income above $164 billion. In inclusive scenarios, stock values range from $1,515 to nearly $2,200 per share when a 30 ratio is applied to the TSLA. Depending on the circumstances, The value of your 100 shares in 2030 could range from $151,000 to over $217,000, given that market values are approaching trillions. These forecasts demonstrate the possibility of substantial profits, particularly when taking into account how Tesla's SSD business might affect its overall valuation in a realistic situation. It is projected that total revenue will approach $700 billion, with $192 billion in net profitability. When considering Tesla's shares with a cautious price-to-earnings ratio of 30, the estimated price per share would be $1,777, translating into a market value of little less than $6 trillion. Under these circumstances, the value of 100 shares would rise to over $177,000 in 2030, a significant gain of nearly $158,000. However, it's important to keep in mind that this projection does not account for the potential impact of fully autonomous driving and robot taxi services, which could greatly improve Tesla's financial performance if the company were to achieve such remarkable figures of revenue, even with a more conservative P/E ratio like 35 or 30. A higher P/E ratio, like 40, would be more acceptable and drive the market value to about $7.7 trillion. A P/E ratio of 30 might not be sufficient. Tesla still has the potential to have a very high market value. Currently, considering the FSD and licensing issues, several analysts and experts estimate that Tesla's value might reach $4 trillion. Tesla's enormous potential has been further highlighted by Elon Musk's suggestion that it may surpass the aggregate market capitalization of businesses like Apple and Amazon. The forecasts that follow are theoretical and predicated on a number of different hypotheses. Future performance for Tesla will be influenced by a number of things, such as its foray into FSD robot taxi services and other advancements in technology. Despite their startling appearance, the figures highlight how revolutionary Tesla's commercial approach may be. This leads us to the end of today's discussion. Given Tesla's diverse approach to innovation and growth, investing in the firm now could offer great potential for future benefits. An in-depth analysis of Tesla's potential stock value, we have looked at a number of possibilities, including the ultra-bull and ultra-bear situations, and we have even considered how revolutionary fully autonomous vehicles and robot taxi services could be. The figures might seem startling, but they highlight how revolutionary Tesla's commercial approach can be. It's time for your opinions now. Which of the following scenarios do you think is most likely, and how do you see Tesla's future? Post your thoughts in the comments section below. If you think this video was thought-provoking and educational, please let us know. Remember to hit that like button to show your support. This is the ideal moment, if you haven't already, to sign up for Tesla stock news. We appreciate you coming along today, and we hope to see you back soon for more fascinating news.